Good morning, everybody. It's Tuesday, June 11th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here had July corn up a penny at 452 and 3/4. July soybeans were down 3.5 at 1184 and 3/4, and July Chicago wheat was up 3.5 at 611. This morning, we had an export sales announcement of 104,000 soybeans to China for old crop 23. Yesterday afternoon, crop progress and conditions report was out. 74% good to excellent for corn. So we dropped 1 percentage point there in the good to excellent, but still a strong rating to start the season here. Corn also shown to be 95% planted. So we're getting to the end on that front as well. Soybeans, 72% good to excellent. This is significantly higher from last year's ratings at this time of 59%. So good start for the soybean complex as well. And 87% planted there in that in the soybean complex. Winter wheat, 47% good to excellent. That's down a couple of points from the previous week. And spring wheat was 72% good to excellent. Strong rating, but did drop a couple of points there. As well from 74% from the previous week. So good morning, guys. We were talking before the show, kind of joking a little bit just on the give and take of a weather market here as we start to inch our way into that fun time of the season. It was noted overnight, the GFS, whether that's highly followed or not, we can argue that as well. But GFS did get cooler for some of this extended heat that they put in yesterday. So it's jockeying back and forth. But anyway, Dustin, maybe a few thoughts to share just on what we saw yesterday afternoon in the ratings and weather and all things that we've got going on here.
Thanks, Dan. Yeah, ratings are pretty good. I mean, 74% good to excellent to start the season for corn. And so right now the market's looking at the narrative and thinking about what it just recently came off of. You're looking out to that 2-week forecast though, and there is still some heat and dryness that's in the forecast. And Ben, actually, I'm going to take your line before we start talking. It's a reminder that this is not a risk-free trade for the funds. With as short as they are going into this, and that mentality shift to get into first sellers starting out in the season to kind of escape that recency bias of not having enough sold like last year. I think the market has definitely been quicker to that sale. And, it just really depends on where this heat sets up. The euro versus the GFS is always kind of debatable. Euro has traditionally been, a more accurate forecast. But if we're going into that week 2 time frame and starting to dry out quite a bit, I think it does set the stage that you look at that spec short position. Are they going to capitulate and get out of that position a little bit as we head toward pollination? That will depend probably on that forecast, surely. But coming from sub break even prices still, we're just getting back up towards that 100-day moving average overnight, right around that 472.25. If we start to breach that 100-day and that 50-day again, perhaps there'll be some momentum swing on the way up. I think despite that good ratings, you still have to kind of look at the forecast and think, what is the reaction going to be if this dryness continues?
Sure. And we saw a pretty big drawdown in open interest overnight too in corn, 18,947. So, something to keep an eye on. We saw a really, really big build as they were getting shorter and shorter. I don't know, Dustin, is the thoughts that maybe they covered some, or, I guess it's all hypothetical at this point, but.
Yeah, there's large increase of open interest on the short side, going into last week. And then we did see the funds build quite a bit of shorts, right? In net total, I think it was 80,000 contracts thereabouts. Mm-hmm. So there could be some short covering happening. I mean, they just had a good move, but we really won't know that until we get the COT report from that.
Sure. Ben, some thoughts from the East here this morning.
Yeah, I concur with Dustin. I think that this is not a risk-free trade. It seems a little bit premature to me to be building such a big short with a lot of uncertainty in front of us. But again, they may be right. We may have a fairly perfect growing season. We could have moderate temps and get the rains every 7 to 10 days. You don't really know how that's going to play out. And even in years where we had some dynamic markets from weather, right? They're not straight shots. We get this forecast, and part of it pans out, part of it doesn't. Market has to readjust. But Dustin mentioned recency bias, and we're starting this from at least over the last 3.5 years from fairly depressed prices relative to what we saw on the big run up, in an environment with a report at the end of the month where we could potentially even lose some more corn acres. And I know that there's a lot of people that are not in that camp. I have humility when it comes to what the USDA gives us. But we have, I think, some significant risk points in the corn market that make me, I mentioned, I think yesterday, I don't think it's a market that you want to pile drive today.
Yeah, and I will just add one thing to it, just because we're obviously not super bearish, just until we know a little bit more about weather. But one thing that we will have to kind of watch out for and worry for a bit here is the Brazilian real continues to make new lows. That's one thing that historically has been kind of a negative as they become more competitive. So if we're moving, we've got CPI, PPI this week. If we have a dollar move higher and the dollar is getting stronger, that is going to reduce our competitiveness. So something to also just put on your radar, to kind of screw the punch bowl a little bit here, is if the real continues to fall.
Yeah, I'm going to put my tinfoil hat on for a minute, and
it's a big one.
And it is a big one. I have a rather large cranium. When the backside of it's full of poison ivy right now. So if it's a little more swollen, you know what it's from. But the last run up, they covered a couple 100,000 shorts in a pretty orderly fashion over a couple of months from early March into the planting season. And there certainly was, offers all along the way in both old crop and new crop. And I look at the market today and I think, if something were to materialize, I don't think the exit is as orderly as the last one, because they weren't fighting any kind of supply disruption at that point, which would be the catalyst for us to see if we were to see higher prices. So I think that we're going to see a pretty volatile corn market, over the next 3 or 4 weeks. It doesn't feel like it during the day, but if you step back, it's been fairly volatile, and I think that that's going to continue to be the case, because I think we've cleaned out a lot of this book above the market. I think that we have people willing to be long on breaks, and people try to push their agenda in these markets, and we can get into a pretty wild situation pretty quick, I think, in corn now.
All right. That's good stuff. Rylan, we got a couple minutes here before we come into the open. We were talking before the show. First off, nice little bounce in cattle. Finally, we saw some, triple digit gains there yesterday. It was pretty good. And hogs, it seems like, have some headwinds. You've got, peso is on 14-month lows there. And so some things that are kind of headwinds there in the hog market, but I'll let you visit about that here shortly.
Yeah, absolutely. I mean, there's been no stop to the fall, the crash in the hog market, like we've seen in a long time. I mean, like, we're right on the skirting along contract lows here, and now all of a sudden, everybody's pointing towards the peso. I mean, Mexican imports on the pork side of the market have been really strong pretty much all year. Year to date, they're up like 10%. So I mean, like, we haven't seen any real problems up until now. We're looking to face this thing, and we've been seeing the managed money crowd just on absolute liquidation. They've gone from near record long position in kind of the building that up in the first quarter of the year, or first and into the second, and now they're just running through the door. There just really hasn't been enough seasonal appreciation right now on the cash side of things to really spur any real support here, or any kind of outside speculation to the upside. So everybody's waiting on good news. It's just like you said, this is another big headwind that I think the market's going to have to deal with. And as we kind of start to, see the end in sight to grilling season, with Labor Day, out ahead, I think everybody's wondering how bad can it actually get. So it's going to be a lot for the market to deal with. But all in all, we just haven't seen any real problems in the data. We'd expect some, that those numbers from Mexico to decline. Once we see the data for next month. So we'll kind of see how it shapes up. But overall, I mean, it's been a brutal market for sure. And just, we have not seen it really start to, we're starting maybe seeing a little bit of a pause, but it's just really started to, it's really fallen hard and pretty fast and caught a lot of people, I think, off guard.
I see it like a $1 lower trade in the livestock cash markets.
In cattle. Yeah. Last week, in the South, it was $1 lower. I don't think that was really any surprise. We were seeing better trade in the North. So, I mean, like, that kind of divergence has just been, it's been pretty consistent, I would say, for the past several weeks. And we finally got some support. The managed money had been kind of winding down some of their long positions. And a lot of that probably focused ahead of this first notice day. Yesterday was first notice day against the June contract after June options expired on Friday. And there were no deliveries. I mean, I don't think that premium in the market to really kind of instill some confidence in that. But at this point, oldest long was between August 24th, 2023. So these guys have had their hedges on for a long time, started to unwind those. You could kind of see it in the spreads yesterday, that we were starting to see some of that, some of the bullish sentiments get pushed maybe a little bit further back. But August led the charge. So it kind of just told me that hopefully it's not just a fluke. It was just a good old fashioned, kind of repositioning before first notice day. But some of that natural selling is dried up. Usually we get a little bit of a bounce coming out of that kind of situation. So we'll see how it all stacks up. We see some follow through today. It could give us some much better opportunities if especially if beef markets don't break. I think the expectation was for a weaker beef market after we got past the post Memorial Day kind of bounce, and we just really haven't seen it yet. So, and cash is holding up pretty good. So all things considered, there really isn't too much bad news as far as the cattle side.
Very good. Appreciate that. One thing to note, tomorrow we're going to have USDA crop production and WASDE report. It's going to be out at 11 o'clock Central. So we'll visit tomorrow morning just about estimates and kind of what we're seeing ahead of that report, which will pave the way for, what we've talked about in the last couple of shows, a bigger report here at the end of the month when we get to updated acres. So that's really what we're going to be focused on. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good conversation. Hope everybody has a great day. We look forward to talking to you again tomorrow.